Remember when a Chipotle burrito was your go-to cheap lunch? When $8 got you a fully loaded bowl that could practically feed you twice? Well, those days are officially dead. Walk into any Chipotle right now and watch what happens when you add guac, double meat, and maybe some queso. That checkout screen will casually slap you with a number that looks more like dinner at a sit-down restaurant. But here's the thing everyone's missing. This isn't just about inflation or greedy executives. There's a calculated strategy happening here that's reshaping the entire fast casual industry. And Chipotle's $15 burrito moment is just the beginning. Let's start with the gut punch everyone felt first. Prices. Chipotle didn't do one giant leap. They did a lot of confident little steps. In June 2021, they nudged menu prices around 4% to fund wage hikes. Totally reasonable, totally defensible. Then 2022 and 2023 brought more inflation, more beef price volatility, and more nudges. Fast forward to April 2024, and California drops a $20 fast food minimum wage. Chipotle's response? A targeted 7% bump in California just to keep math honest. That's not rumor. That's from the company's CFO. Then late 2024, a 2% national increase landed to offset inflation. Small individually, but together, you felt it. If you live in a high-cost market, a steak burrito, chips, and a drink is now flirting with a weekend meal price, not a quick weekday fix. And consumers are voting, not with angry tweets, but with their feet. In Q2 2025, Chipotle reported comparable sales down about 4% and transactions down roughly 4.9%. Average check was actually up approximately 0.9%. Translation: fewer visits, slightly higher tickets, the classic come less, spend a bit more pattern. That's what it looks like when value perception erodes, but the brand is still strong. Chipotle opened 59 new restaurants in that quarter, so the growth machine is still very much alive, but same-store traffic softness is a warning light, and the company said as much. Context matters. Eating out inflation is outrunning grocery inflation again. The government's own data shows food away from home prices up about 3.7 to 3.9% year over year lately, while grocery prices, food at home, are up closer to about 2.7%. So when you ask, why does this bowl feel pricey now? It's not just Chipotle, it's the whole sector drifting upward, and it's been doing that most of 2024 to 2025. That gap pushes budget-conscious customers to cook or to chase promotions elsewhere. Meanwhile, the value war outside is loud. McDonald's blasted out a $5 value meal over the summer, a tactical remember us to the masses. Wendy's and others piled on with their own deals. Chipotle can't and shouldn't play the $5 game. It's a different cost structure and a different brand promise. But when the broader fast food soundtrack is deals, 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 your $13 plus bowl starts to look less like Tuesday lunch and more like Friday night. I earned this. Now let's talk about the thing nobody wants to say out loud: portion anxiety. You've seen the videos. Some bowls look generous, some don't. A 2024 wave of posts accused Chipotle of shrinking scoops. The company denied any policy to short portions, but the controversy birthed lawsuits and even analysts weighing bowls. It got silly. Yes, someone literally measured entrees to the ounce. But the bigger point is trust. If customers think the bowl is lighter after the price went up, you don't win that argument with a press release. You win it with consistently heavy-looking scoops on the line. And if you're Chipotle, you need that confidence on camera because your brand is a content factory whether you like it or not. So what actually broke? Not the food still slaps. The break is the value equation that used to feel magical. Generous portions plus clean ingredients plus speed plus a price that made it a no-brainer. The inputs got more expensive. Labor, avocados, dairy, tortillas, packaging, rent, you name it. California raised the floor for fast food wages to $20, setting a new baseline for a huge state where Chipotle is deeply exposed. Inflation cooled but didn't reverse. And yes, shareholders expect the brand to protect margins, so prices drifted north and regulars started moving south to their kitchen or to rival promos. That's the game theory. Chipotle knows all of this. They're not asleep. The company's whole playbook in 2024 to 2025 reads like, how do we keep the burrito line from collapsing under its own popularity without depremiumizing the brand? Digital is roughly a third of sales. Chipotlanes, the drive-through pickup lanes, drive higher volumes and margins, and the kitchen itself is getting a tech makeover. There's a robot helper for avocados. Yes, Autocado is real. Think de-pitting and peeling at scale, and an automated digital make line that can crank out online orders at speed while humans stay focused on the in-store line. If you've ever watched a lunch rush melt the line into chaos, you get why this matters. It's not sci-fi. They've piloted this equipment to reduce seconds and errors. But technology doesn't fix the core emotional problem. Price to joy. When a bowl creeps past an invisible number in your head, the dopamine drops. You start strategizing around coupons, timing, or alternatives. And that's exactly what we're seeing in the industry. People service hop the way they stream hop. Chase the promo here, cancel there, come back next quarter. Chipotle's advantage used to be that it was the default. You didn't think, you just went. Losing that reflex is the real risk. Let's zoom out for a second. In 2024, Chipotle pulled off a 50-for-1 stock split, one of the most dramatic splits in S&P 500 history. It signaled supreme confidence. We're big, we're liquid, we're for everyone. The stock ripped. Then reality tapped everyone on the shoulder in 2025. Comps slipped, traffic softened, consumer budgets tightened, and the market recalibrated. The split didn't create fundamentals. It just made the share price digestible for retail investors. Still, it tells you how strong the long-term belief is in this brand. So is Chipotle actually pricing itself out of business? No. Hyperbole is the YouTube thumbnail, nuance is the video. The business is expanding, not shrinking. The risk is subtler, pricing itself out of habit. If you love a brand but only visit once a month instead of once a week, that's how same-store sales slide while unit counts rise. It's death by 1,000 Thursdays. You can already feel the early fixes. Chipotle rolled back a tiny piece of premium by refocusing on throughput and consistency. Digital pickup shelves are cleaner. Order accuracy on mobile is marginally better. Some markets quietly test bundles or limited time proteins that feel like value without slashing headline prices. And the company is still investing like a winner. More stores, more Chipotlanes, better equipment. But the next 9 to 12 months are going to decide whether they re-anchor the value story or drift further into special occasion lunch territory. Here's the brutal math that sits behind the counter. California's $20 wage law didn't just bump payroll, it reset competitive dynamics in an enormous market. Chipotle's CFO told reporters the company needed an immediate 6 to 7% price action there to cover the move. If you're a national chain with a transparent price board brand, you can't hide that with a 52-item menu and tricky combos. So the price moves were visible, social media friendly, and endlessly memeable. Then a approximately 2% national lift arrived that winter. Meanwhile, BLS says restaurants broadly are still hiking in the 3 to 4% range year over year. The outcome writes itself. A noticeable chunk of guest visits less often and comps dip. Now the good news, Chipotle still has unfair advantages. They own the category they invented. They have one of the cleanest menus in fast casual. They print culture, TikTok recipes, hacks, bowls, and they've got system-wide speed plays most rivals don't. Chipotlanes outperform non-Chipotlane stores, digital lets them batch efficiently, and automation is finally meaningful rather than a PR stunt. The automated digital make line can hit high, consistent output when the printer is screaming. Autocado isn't about eliminating labor. It's about taking 30 minutes of repetitive injury risk work and turning it into 5 minutes of prep. That's how you protect throughput without burning out your crew. So what would an actual comeback look like? Not a coupon book, a credibility sprint. First, the line has to look generous again. If the scoop looks timid, the brain says, not worth it, even if the scale says it is. The portion size discourse got so loud in 2024 that it spawned litigation and bowl weighing headlines. You don't fix that with tweets. You fix it with a national portion standards reset, visual aids on the line, and an internal metric that's as important as speed: guest perception of generosity. I'd even overportion for 60 days on purpose to flood social with the opposite narrative. It's cheap advertising. Second, create a reliable value anchor that doesn't trash the brand. Not a $5 meal. Chipotle shouldn't become a clown. Think a everyday bowl that's under a clearly marketed psychological price threshold in each market, not one national number, available all day with transparent portion spec. It has to be permanent, not a promo, because the point is to restore the weekday habit. Pick smart combos, lock the food cost with long-dated contracts, and sell volume. This is what rivals are doing with value meals. Retraining their base to come more often, you need your version. Third, lean into the kitchen tech, but sell it as consistency, not robots. Nobody orders more robots. They order no mistakes. Show the automated line quietly delivering perfect bowls while the human line smiles and heaps salsa. The optics matter. We accept machines when they make humans more human at the point of service. Fourth, fix the app's trust gap. If the in-person bowl looks heavier than the mobile bowl, you just taught millions to avoid digital. That's backwards. Digital is your most efficient channel. Solve the invisible queue frustration by over-communicating live capacity. If the make line is slammed, the app should show a realistic wait, not the optimistic one that turns into a 15-minute loiter by the shelves. Fifth, tune pricing like a scalpel, not a hammer. Macro says restaurants can no longer keep outrunning groceries. BLS and USDA data confirmed the gap narrowed in 2025, but still favors eating at home. That means the next price increase needs to be surgical, by market, by day part, by basket, and paired with a visible give back, either a permanent everyday bowl, a Chips on Us weekday happy hour, or a double rewards window that's simple enough to remember. Sixth, counter-program the value war with story, not shouting. Chipotle has real moats, sourcing, clean labels, and a kitchen you can see. Film Film the supply chain, film the knife work, film the prep. Flood feeds with, "This is why it costs what it costs," not as an excuse, but as pride. The only way you win against $5 bundles is to convince people your $11 to $13 is worth it in a way a $5 bag of salt and nostalgia isn't. 7th, protect the crew. California's wage law happened because crews were getting squeezed. If you try to tech your way out of labor entirely, you'll trade one problem, wages, for another: turnover, morale, service. The best stores in this chain are tribes. Those stores carry comps for entire regions. Every ops decision should answer a single question: does this make it easier for the best crews to be their best? Autocado says yes. Automated Make Line says yes. 15 different LTOs at once says no. Let's talk risk. Investors love the long-term Chipotle story. Thousands of potential new units, international white space, rising average unit volumes, but the 2025 story has execution traps. If consumers cut one restaurant trip a week, it often starts with the higher ticket casual spot and ends with the cheapest calories per dollar. That's not you. If you push price again without an offset, expect another traffic bruise. If portion variance lingers, expect the social narrative to keep biting. If digital bowls lag the line, expect app usage to stagnate when you need it most. Now, counterpoint. There is absolutely a world where Chipotle doesn't discount a penny and still re-wins habit by making the experience feel like value. A generously scooped, consistent, error-free bowl delivered in 7 minutes is value at $12. A stingy, inconsistent 18-minute bowl is a rip-off at $9. Speed, certainty, and generosity can carry you through a pricey cycle. That's why the kitchen automation matters so much more than people realize. It's a speed and accuracy weapon, not a headline. Quick reality check with the scoreboard. Q2 2025. Transactions down approximately 4.9%. Comps down approximately 4%. Average check a hair up. Digital sales approximately 37% of revenue. 59 new stores opened with a heavy Chipotle mix. That's a business still expanding while taking a short-term bruise on traffic. If you're looking for a cliff, you won't find it. If you're looking for a turning point, this is it. And if you want a macro alibi, everyone's in the same storm. Restaurants, especially limited service, raised prices more than grocery. Consumers feel it. The BLS and USDA data aren't vibes, they're receipts. That's why the industry is suddenly rediscovering value like it's a lost ancient manuscript. But you can't out-dollar menu the dollar menu. You can only out-Chipotle everyone else. Fresher food, faster lines, and bowls that look like the picture. Every time. Let me leave you with this. Chipotle didn't become a habit because it was the cheapest. It became a habit because it was the smartest spend in a category full of dumb calories. Actual food you could recognize at speed in portions that felt grown up for a price that didn't make you do math. That equation is still salvageable. It just requires the company to stop playing defense on price and start playing offense on value signals, visible generosity, ruthless consistency, honest wait times, and one dependable always-on entry-level bowl that respects your budget without insulting your taste. If they do that, the memes flip. The $15 burrito becomes worth it, and the twice-a-month customer becomes twice a week again. If they don't, well, there's a reason your pantry suddenly looks like a taqueria and your air fryer smells like cumin. Chipotle hasn't priced itself out of business, but it has flirted with pricing itself out of our routine. And in restaurants, routine is everything.